Introduction to cost management is what we'll be talking in today's video. The cost management, remember, we are talking about costing. So financial accounting versus managerial accounting. What are we looking into it? Financial accounting is devoted to providing information as to the external users. These users are who? The government, the regulatory authority, the investor, the banks, the agencies from where you've taken money for. So financial accounting, it's a statement of providing information. But cost management identifies, collect, measures, classifies, and report information that is useful for managers to take appropriate decisions. That is regarded with planning, controlling, and decision making. So that is what cost management is all about. It identifies, collect, measures, classifies everything that pertains to the cost. Now, what we are looking at, cost accounting attempts to satisfy cost objective for both financials and management accounting. Thereby, now is the time what we are looking forward to. Management accounting is concerned specifically with how cost information and other financial and non-financial informations should be used for planning, should be used for controlling and decision making. This is management accounting. We are talking about cost accounting, attempts to satisfy the costing objective. Management accounting as to how prudent the cost can be utilized into other usages altogether, extensively used for decision making. Let us understand what are the factors that affects cost management. One, and the foremost thing, is the global competition. The new competitive environment has increased the demand not only for more cost information but also for more accurate information time and again. This is what we would love to understand. The competition, the environment is becoming very dynamic per se. Vastly imported transportation, communication has led to a global market for manufacturing and service firm. That is what we should be talking around here. The growth of the service sectors. Yes, as the traditional industries had declines in importance from agriculture, we are going for corporate agriculture altogether, mass productions of agricultural goods. The service sector's economy has increased in importance as far as potential for employment and generation or contribution to the gross domestic product. So growth of the service industry is inevitable. Deregulation of many services has increased competition in the service industry. Advances in information technology, computers are used to monitor and control operation. The result is an operational system that is fully integrated with marketing and accounting data thereby. Increased ability to accurately cost, produce because of the advances in the tools as we come across with it. What are we looking into it? We are looking for the emergence of e-commerce, internet trading, electronic data interchange, barcoding, if I may say so. Advances in management environment. What are they? The theory of constraint is the method used to continuously improve manufacturing activities and non-manufacturing activities. This is the theory of constraint that we need to go around it. It's a method to use continuously improve manufacturing and non-manufacturing activity. JIT, just-in-time manufacturing, is a demand pull system. You don't produce it and keep it in the inventory because that is consuming capital. So you produce as on when on require the product only when it is needed. CIM, or the computer integrated manufacturing, is an automation in the manufacturing environment, absolutely barcoded. Radio frequency identification will pass on the message as what is required in which all areas. Customer orientation, firms are competing not only in terms of technology, not only in terms of manufacturing, but also to grab the eyeballs of the customer. The attention of the customer is very important. The delivery and the response, which might add value for the customer, is what every company is trying to striving for. Companies must also satisfy the needs of internal customers, such as staff function, such as to support the line function thereby. Now, what we are talking about it, we are talking about the new product development. Management recognizes that high proportion of production costs are committed during development and design stage of a new product. What do we look forward to? How do we go across with it? The requirement to control cost encourages the uses of target costing and the activity based management. Very pertinent to mention it out here at this point of time. We are talking about total quality management, continual improvement, and elimination of waste are the two foundation principles that govern a state of manufacturing excellence. Absolutely well said. Continuous improvement, probably elimination of any sort of wastage are two things that should basically inculcate the manufacturing excellence altogether. A philosophy of total quality management in which manager strives to create an environment that will enable the organization to manufacture a perfect product has replaced the acceptable quality attitudes of the past per se. Time as a competitive element. What are we looking at? Today, time is a crucial element in every phases of the value chain. We are talking about speed of delivery, on-time delivery. Decreasing non-value added time appears to go hand in hand with increasing quality as such. So that is where you delight a customer. That is why you bring in the wow effect. We talk about the efficiency and how do we go around it. While quality and times are important, improving this dimension without the corresponding improvement in financial performance may be absolutely futile, if not fatal. Efficiency is a must. Now, what are we looking into the traditional accounting system? What are the pilferages that goes around it? First and foremost is the transaction that comes around it. Every transaction is noted into a journal entries as to what comes from where it comes, what goes to where it goes, to posting of the accounts and the financial reports that we start generating. Now, this is the traditional accounting system goes around it. Now, allow me to introduce a database relationship of accounting system. Therein comes the transaction. Everything can be customized. All the transactions, everything can be customized as to which vendor, which person, what are my cost centers, how do you go around it. So we can have n numbers of custom reports, n numbers of custom reports, so that you can take appropriate action every now and then. A cross-functional management, as far as the cost management is concerned, product costing must take into account cost associated with other functions, such as marketing, such as logistic per se. A cost management system must be flexible enough to provide appropriate cost for the circumstances as the case might be. We are looking forward to those kind of circumstances. Today's an accountant must be an expert at valuing methods in terms of costing, in terms of achieving quality, differentiating between value added and non-value added activities. You need to understand which are desirable activities and which are vital, or should I say essential activities. Measuring and accounting for productivity as the case might be. The role of the cost management accountant, what is it? CMA, cost and management accountant, it's a line position that have direct responsibility. Look, direct responsibility for the basic objective of the organization is to increase profitability, is to increase the viability, increase more revenue, cut down cost, curtail cost. Staff position are position that are supportive in nature and have only indirect responsibility for an organization basic objective per se. What are we looking into it? We're talking about a president. Let's say a president line function is production, vice president, production supervisor, mechanic foreman, or assembly foreman. What we looking into it? Let me look into the staff function. Then we have the financials vice president, the controller, and the treasurer. We have internal audit. We have the cost accountant. We have the financial statement. We have the system. We have the cash flow management that needs to be taken into understanding. Now, the role of today's CMA, cost and management accounting, is of that of controller, is that of who is going to present your reports, is that who is going to ensure that regulatory reporting is to be done. Tax planning has to be forwarded, reporting, performance reporting, internal auditing. We should be looking about budgeting. We should be looking about accounting system and internal control thereby. The treasurer, as a treasurer, you should be into collection of cash, into monitoring of the cash payment, into monitoring of the cash availability, short-term investment, short and long-term borrowing, and issuing of the capital stock as the case might be. Remember, this is the work of the treasurer. We have the accountant and we have the treasurer that goes around here. Planning is a detailed formulation of the future action that is needed to achieve a particular objective in mind. Planning requires setting objective, identifying methods to achieve those objectives per se. We are talking about cost management association. It's not only planning but also controlling. It's not only controlling but also feedback. Controlling is the managerial activity of monitoring plans, implementation, and taking corrective action. Feedback, on the other hand, is important. That can be used to evaluate the future course of action and the contract, perhaps the steps taken to implement a plan altogether. We are talking about continuous improvement, absolutely continuous improvement, as the case might be. Incremental improvement, but definite improvement. That is what total quality management endeavors is. In a dynamic environment, if a firm remains competitive and establish a competitive advantages thereof, what are we looking into? Decision making process. Decision is the process of choosing among the vying competing alternative, the best alternative, the alternative that suits you, the alternative that boosts your profitability. The ethical conduct. Know what happens with the ethical behaviors can create customers and employee loyalty. Avoid litigation cost altogether. These are the benefits of your ethical behaviors. It creates loyalty. It in fact avoids any sort of litigation cost. The standards of ethical conduct for management accounting should be competence, should be confidentiality, should be integrity, and should be product objectivity. So, four competence, confidentially, integrity, and objective are the ethical standards altogether. With this, I come to an end of this video. Thank you for watching the video till the end.